So Netflix released earnings yesterday and it has seen a large decline. Year to date, the stock's been performing pretty well. A lot of optimism in the business. They just released a new podcast deal with Spotify, but this negative earnings really upset investors. So their earning per share estimate was 6.96 and they reported 5.87. Now their reported revenue to estimate was right on dot, 11.51 billion. All right, looking at their 8K, we can see that revenue did increase by 17.20%. For a quarter four of 2025 estimate, they're seeing revenue increase by 16.7%. Their operating income did decrease from quarter two of 2025 to their current earnings report, and net income did decrease from their last earnings in quarter two of 2025. On a positive note, though, their free cash flow did increase, which is good. Now, in United States and Canada, they saw a revenue increase from their last quarter, as well as in Europe, Latin America, and Asian Pacific. Although definitely their biggest revenue is coming from the United States and Canada. Now, as many people know, Netflix does have a pretty strong market share in the TV or streaming industry. From this chart, we can see that Netflix is sitting at 8.6% for Netflix share of TV time in the US. All other streaming services, 37.7%. In the UK, they have a little bit of a stronger market share. You can see that Netflix is at 9.4%. All other streaming services is at 26.7%. Now this quarter they had some of their biggest returning seasons, such as Stranger Things, The Diplomat, Nobody Wants This. Squid Games was huge for Netflix. They also had some big films such as the Adam Sandler film, Happy Gilmore 2. And they have some exciting live events coming up, such as the NFL Christmas Game Day doubleheader and a boxing match between Jake Paul and Gervonta. See that really Netflix is kind of expanding. They have their returning seasons, which people love. The new series, their new films that they make. The Adam Sandler one, Happy Gilmore 2, did really well for Netflix. But they're also kind of experimenting and expanding into some of these exciting live events, which should create a lot of revenue for Netflix. Now, Netflix does have this AI feature, Gen AI, which they use a lot. They used it in the Happy Gilmore 2 film. Filmmakers used Gen AI coupled with ML and I-lines to really increase efficiency during the filmmaking process. Now, Netflix does have, considerable competition. There's a lot of other streaming services such as, Hulu or HBO Max. One thing that Netflix has done very well is create their own niche films, series such as Stranger Things, Squid Game, Bridgerton. If you actually go on Netflix, you can see that there's a lot of films, directed by Netflix. Films you can only see through Netflix, which, retains a large customer base for Netflix, which thus, creates a lot more profitability. Netflix now is also on a stock repurchasing program. In September 30th, 2024, they were at 428,239 for basic weighted average shares of common stock outstanding. They've dwindled that down to 424,455. Really, any stock repurchase program, they're betting that their own company, that their own stock price will go up. Now, Netflix came out and actually blamed their earnings miss on a tax dispute in Brazil, which cost them $600 million. Many investors did not like that and think that they were overblowing this case and that their revenue growth actually wasn't that strong for this quarter. I personally think that their main business still holds strong and they are such a huge powerhouse in the streaming industry. Now, with this large sell-off due to the negative earnings, this is a great buying opportunity. You're getting the stock at a discount. Their main business still holds strong. They're a large powerhouse in the streaming industry and they will definitely break out of this little sell-off that they have due to the earnings miss. Now, really the only concerning catalyst for this company is the high valuation. As of quarter three in 2025, their profit to earnings ratio was 50.09, quite high and about 20 points higher than the S&P 500 average. Now, when comparing that price to earnings to EPS diluted growth forward, Netflix is at 39.03%. Really what you're looking for, or what I'm looking for, is a higher earnings per share diluted growth forward than their price to earnings ratio, thus a smaller PEG ratio. But Netflix really isn't in the worst spot. Yeah, they have a high valuation, and the pullback actually will kind of help them rebalance their valuation a little bit. But throughout the video, I continue to talk about, Netflix being this powerhouse of the streaming service industry, and we can see here that they truly are. Now, their enterprise value is at $48.271 billion. Market cap is at $474.38 billion. Comparing this to Walt Disney, Warner Brothers, Live Entertainment, they are on the top. Now, also, if we look at revenue growth, Netflix is sitting up there at 15.41%. Disney 5%, and the other streaming services just are negative. So they really do have such a strong market share, and they're continuing to grow. They're implementing, new ways to, reach audiences services through live entertainment, as well as these big deals with Spotify. Before buying though, I'd definitely wait a little bit just to see where the stock price goes, maybe 1 week, 2 week. The 1 year price target that analysts are giving this is 1,366. So if the analysts are right, sometimes they're not, but if they are, it still has more room to grow. I definitely think holding this stock long term is such a good play, and they will continue to expand their business and increase their profitability. Right now, you're just getting it at a discount. In the short term, it may continue to run downward, but in the long term, it will definitely reach, new highs and continue to expand. I hope you guys enjoyed this episode. Make sure to subscribe. It does a lot for me in the channel. Make sure to comment down below your opinions on Netflix and like the video. And I will see you in the next episode.